Hello, dividend growth stock investing friends. It is Colby, the DGI Crab, and at the request of a viewer down there in the comments, going to do a deep dive on SCHD, the internet's favorite dividend ETF. We're going to be looking at the performance of this passive income stalwart and basically go over how it's constructed and its past performance and discuss why I believe it is an ideal ETF for what I refer to as the Tier 3 investor. If you are new, my channel is focused on 60 individual high-quality dividend growth stocks split into 4 separate categories or tiers based on the age and timeline of the investor. I believe those are the most important metrics for a dividend growth stock investor to take into consideration. And I also believe that a dividend growth stock investor should maintain a portfolio that has at least 50% weighting in ETFs. You could pick one or two or maybe a few different ETFs with varying strategies that you like. I don't necessarily think there's a right or wrong answer, just so long as you're keeping in mind the timeline that you are focused on and what you're hoping to accomplish with the ETF. Now, as I said, a Tier 3 investor is what I think is the best fit for SCHD. This is someone between the ages of 42 and 53. Ideally, in your younger years, you'd have piled up some things that are more dividend growth compounders and just overall share price compounders because you've got a lot of time in the market. But once you get a couple of years into your 40s, you'll want to start adding some things that have a little bit higher starting yield to get you to financial freedom with your dividends if that is indeed your goal. However, you don't want to I don't believe you want to just jump right into things that yield well above what SCHD yields and sacrifice the year-over-year growth. So you're 42, 46, heck, even 52, you still got some time in the market to enjoy dividend increases. Not a licensed professional, so do your own due diligence on SCHD. This is my due diligence. We're going to jump right in. So what is SCHD? It's the Schwab U.S. Dividend Equity ETF. It's constructed to track the Dow Jones U.S. Dividend 100 Index, which is composed of high dividend yielding U.S. stocks with a strong track record of fundamental strength. So, the initial universe, if you will, is they're going to start out with the largest 2,500 U.S. stocks by market capitalization, excluding REITs. So SCHD wants to provide tax-efficient, qualified dividends to your portfolio. So the tax implications on SCHD are very minimal. So that's certainly a major advantage that it has. It doesn't rely on REITs or BDCs or MLPs or any other kind of strategy that's going to tax you in a different way than qualified dividend income does. The stocks must have a minimum of 10 consecutive years of dividend payments, so that's going to filter out a lot of them already. They have to have a minimum float adjusted market cap of 500 million. So not super small cap companies. There could be some smaller ones in there, but $500 million company is a pretty decent sized organization. And they have to have a minimum 3-month average daily trading volume of $2 million. So basically just a stock that people are aware of that is that's getting bought and sold on a at least somewhat consistent basis. So their screening process beyond that, they start to apply these filters. They have 4 factors that are scored: cash flow to total debt, return on equity, dividend yield, and 5-year dividend growth rate. Each of the stocks are scored and based on these metrics and then ranked. And then what they do is they take the top 100 companies based on the composite fundamental score on those 4 metrics. So what this is going to do is it ensures that they're not only stocks that are paying dividends, but they're showing financial strength and stability. So they're not looking for yield traps, potential dividend cutters, things of that nature. Now, what they do is they take these 100 selected stocks, they're float adjusted market and cap weighted, but no single stock within that group of 100 can be more than 4% of the index or 4% of SCHD. And then they also take sector weights get capped to maintain diversification. They don't want more than 20% in any individual sector. So when they go about reconstituting or rebalancing the ETF, these are some things that are taken in mind. They reconstitute annually in March. You will see plenty of content on YouTube around that time, year in and year out, where people are analyzing what exactly SCHD has done, what positions they've trimmed, what positions they've added, and then kind of try to dissect how they think that's going to impact the holding long term. Basically, just what this means for you guys is all of the components and weights are reevaluated and potentially changed based on the updated fundamentals, and they rebalance it quarterly to ensure weights don't drift too far due to price movements. So they'll reconstitute the actual shareholdings once a year in March, but then every quarter they might trim certain positions, just meaning if one stock in there in a given quarter just shoots way up and it goes comfortably well up above that 4% mark, then they'll take that opportunity to trim back that position a little bit and add more to some of the positions that made up a little bit less based on those fundamentals. So what does all of this mean in terms of performance? So if we go over here to Seeking Alpha, and just bear in mind, I am not a premium Seeking Alpha member. And I point that out just to show you that you don't have to be a premium Seeking Alpha member to do the type of research on SCHD that I do. So what we're going to do when we pull it up is I'm going to start here on the Holdings tab just so we can see what it looks like right now. And you can see the way they've got it this year is consumer defensive and energy at 19% and some change each are the sectors that are the two largest within it, but nothing above 20%, as you'll note. And then they've got healthcare, industrials, technology as the other 5 main holdings, and then they throw in some consumer cyclicals, some financials, little communication, little basic materials, almost no utilities whatsoever, 0.04%. That, as I mentioned, they don't have any real estate in here because they want the qualified tax advantage dividend income. The top 10 holdings you'll see here, we've got Verizon, Coca-Cola, ConocoPhillips, Altria, Lockheed Martin, Cisco Systems, The Home Depot, Texas Instruments, Chevron, and AbbVie. 8 of these 10 stocks made my final list of my 60 top 10 favorite stocks. Cisco Systems is one of the ones that's not on there, but I put that in my next 40 up, which I refer to my bubble stocks. So I don't own any Cisco or add to it, but it's one that could eventually get into the mix if I need to replace one of my top 60. ConocoPhillips is one that maybe I need to be paying a little bit closer attention to and do a deep dive on that. Maybe that's one that I ought to consider adding at least into my bubble stocks list. But a really nice group here. Obviously, with Verizon and Altria, you're going to get a couple of really high-yielding stocks here. These are Tier 4 category stocks for me, so high yield for the 54 and older investors. Coca-Cola, and let's see here, Chevron and AbbVie are all in my Tier 3 category. And like I said, Tier 3, age 42 to 53. This is the age category that I think this ETF is best suited for personally. So if we take a look at I'm going to go back to this just main summary tab here. So here's the main problem that with SCHD as I see it right now. You'll see here over the past year, it's basically traded flat. It's down 0.4%. So basically exactly where it was within the last year. If we zoom out to the 5-year, fairly respectable, 50% share price appreciation over the past 5 years. But the trouble that I see it as with SCHD and why some people are maybe getting a little frustrated with it is that it's currently trading for just under $26. And if we go back to all the way to August 2021, around like April, early May 2021, so about 4 years back, it's traded pretty flat for the past 4 years. Most of that 50% 5-year appreciation is coming off of some lows that we saw in 2020 due to COVID-19. If we zoom out again to the 10-year chart, it's up 94% over the last 10 years. Respectable price appreciation, certainly, but not anything too wild. So that's why I don't think it's a great move for young investors, especially those tier one folks that are 30 and younger. There's just going to be stuff with better share price appreciation, and I think long term, probably better dividend growth too. But now we're going to go to the dividends tab because this is really where SCHD shines and the whole purpose of the ETF in the first place. So if we scroll down here to the scorecard, we can see as of today, it's yielding 4%. So very nice starting yield from SCHD. They have a 5-year growth rate of 11.5%. 4-year starting or 4% starting yield, 11.5% 5-year growth rate. That's a rockin' awesome dividend combo factor. I don't know if that's actually a standard term or not. That's something that I picked up from the Dividend Diplomats, Lanny and Bert. If you haven't watched Dividend Diplomats, go check their channel out as well. Love those guys. They had a major impact on my investing style. But basically, when they talk about dividend combo factor, they're just you take the starting yield, you add the 5-year growth rate. In this case, it's about 15.5%. And you want to get that combo factor at around 10% or better in most cases, depending on what you're buying. And SCHD is just smashing that. They've got a 13-year consecutive dividend growth streak as well, which is quite nice. If this was an individual dividend stock, I'd be paying really, really close attention to this. Now we'll go over here to the dividend yield here next, so you can get an idea of the history of what that yield has done dating back 10 years. So you can see here in this column the average dividend yield. We can see that SCHD has typically yielded somewhere in the high 2% to about the mid 3% for quite a long time. But so far this year in 2025, this has been a bit of an aberration. The average yield has crept all the way up to 3.75, and the max yield that we hit this year so far anyway of 4.27 is as high as it's ever been, except for a brief blip in 2020 during the COVID-19 crash when everything went down. So that's kind of interesting to see that it's yielding so much higher right now than it typically does. Now, if we hop over here to the dividend growth dating back to the inception of the fund, we're really going to start here at about 2013 because this was kind of our first, really full year where we could observe the dividend growth. You can see a lot of good numbers here: 11%, 15, 9, 9. These say basically you'll say 7, 7, 19, 17, 10.8, 13.9. 2023, we had kind of a bummer of a year of dividend growth for SCHD of just 3.77%. Still not awful, but again, paired with maybe a 3.5% or 3.25% yield, a 3.77% growth rate on something that also maintained a pretty stagnant share price, not amazing. But then in 2024, bounced right back with a 12.23% dividend increase. That was the best dividend increase among the 8 ETFs that I cover on the Great ETF Race series. Check out that playlist here on the channel if you haven't already. So SCHD certainly has done an amazing job from a dividend yield and growth perspective over the last decade plus. Main downsides for me: share price appreciation hasn't done much, but share price appreciation isn't necessarily why you're buying SCHD. You're buying it for that qualified and growing dividend income. The other downside, that as I see it, is 100 different holdings isn't as diversified of an ETF as I would necessarily like. So if this was one of the only things that I was investing in, it might not be quite enough diversification for my particular tastes. You could also compare this to, if you go over to the peers tab, you could compare SCHD against similar ETFs like VYM, DGRO, VIG. All 3 of those are in the Great Dividend ETF race as well, with varying strategies. And all are fine options, but people love SCHD, and I absolutely see why. I love it too. You just have to know what your time horizon is when you start buying it.